Hello, everybody. Welcome to Monday Morning Must-Knows. My name is Merlin Rothwood with your weekly dose of financial information, insights, and maybe even forecasts. Now, last week, Jerome Powell lit up the markets on a Friday with some fairly positive comments. I listened to the whole speech and I thought, that was pretty good. He really touched on a lot of points, and I think the piece that stands out for me was when he said, the time has come for policy to change. This might be signaling some rate cuts coming up. Of course, I'm in the camp of that September 18th meeting. Definitely getting a rate cut there, although the markets have priced in 4 rate cuts by the end of the year, which is crazy because you only have 3 more meetings. That means at least one of those meetings will be a 50 basis point cut. I don't think so. I think we'll get 1, maybe 2 cuts by the end of the year. But hey, what do I know? I'm just going to trade the action as it happens, as I did on Friday. So let's dive into our earnings calendar to start with. Of course, you guys know I always start with the earnings calendar because maybe there's something on there that's in your portfolio, and there is some major, massive market-hitting news coming out this week. But unfortunately, that won't be on Monday. Monday, we have a BHP reporting earnings, so kind of a yawn. Next, we've got the Bank of Montreal and the Bank of Nova Scotia, some Canadian banks reporting earnings, and then the fireworks start. The most anticipated earnings of the quarter, Nvidia will be reporting after market close on Wednesday, so that could create some serious market waves. Remember, they have been lifting their forecast. They raised their forecast. They're really optimistic about their earnings, almost every earnings announcement. Is that going to change? Because we're seeing companies like Alphabet and Microsoft saying that they're spending so much on AI, not getting that return yet, that may cut back on some of their spending. And a lot of that money goes to Nvidia. So we'll see what their numbers show on Wednesday after market close. Be careful with that one. You also have Salesforce, CrowdStrike, and Net Appliances. And then Thursday, a lot of names. You've got Dell, Marvell Technologies, Autodesk, Lululemon, Dollar General, Best Buy, and Ulta Beauty. And on Friday, we've got nothing. So now it comes down to U.S. domestic economic data. Of course, every week there's some piece of economic data coming out, but the pieces that have been in focus and the most important parts, hands down, because of the Federal Reserve stance on our market, is inflation, growth, and unemployment. Those 3 factors might combine to give us a sense of inflation, deflation, and stagflation overall for the U.S. economy. Well, let's go into our next announcement, which is going to be growth in the United States. That is particularly GDP. Now, with gross domestic product, what we're looking for is an increase in the overall gross domestic product of the United States. That's a sign of economic growth, that internalized stability, and maybe even more jobs, etc. It's a good thing. Well, you notice the previous number there was 1.3. Now, this is challenging because what that number reflects is the quarterly number. The number they're actually expecting is going to be what's referred to as the annualized rate, which is taking the last 4 bars. So I want you to go back here and look at this last one here that says 2.1. Now, that's 4 quarters ago. When we get our new data on Thursday at 8:30 a.m. Eastern Time, that bar with the red arrow underneath it, that one will not count in the calculation anymore. So if we want our GDP to stay the same or get better, the next Thursday's number had better be 2.1 or higher. Because remember, we're dropping the 2.1. If we take on another 2.1, then it stays the same. If we get a higher increase than 2.1, obviously GDP will slightly increase. And if it's lower than 2.1, then GDP will decrease. So this is one to keep an eye on for Thursday at 8:30 a.m. Eastern Time as that GDP number comes out. Again, you have Jerome Powell speaking to this at Jackson Hole last week, talking about growth, and of course that is something that all the markets want, is more growth for the United States. That will continue this nice, robust market rally we've had for quite some time. Now, the final piece of our market for the week, again, goes back to the United States, and oh, look at that. It's inflation. Yes, we talked about consumer price index, producer price index a couple of weeks ago. Now it's the one that the Fed has said is the number they want to focus on, and that is the core PCE price index. You can see that it has been dropping. We're certainly lower than we were back in 2021 and 2022. We came up last month on our reading to 0.2%. Now, Friday at 8:30 a.m. Eastern Time, we'll get the next report. And what do you think it's going to be? Expectations are we're going to come out right where we are at 0.2%. Now, that is not necessarily a good thing. What that 0.2% would mean is that we're not seeing the month-over-month declines. But remember, if we get 0.2% and we get 12 months of 0.2, then that would equals a 2.4% inflation rate, which would be much better than what it is today. Right around 2.9 is what the current numbers are according to our CPI data. So Big stuff happening this week, of course. Nvidia, really probably the most important part of the week, particularly for those of you who are trading the NASDAQ, involved with tech stocks. That has been the piece that's been bringing up this market and bringing up major tech companies' AI expenditure. Do we see their numbers decline? I'm not going to go out on a limb and say yes or no. I just know it's going to be very volatile. You also have GDP numbers and you have some inflationary data. Busy week for you guys. That is your Monday Morning Must-Knows. We'll see you next week.